Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So you can see that on the daily chart we see that despite existence of the overbought on the daily chart, so as we have discussed in the weekend, we suggested that probably will become some resistance area and market could show some downside reaction, especially because it was also A, B, C, D target, it's OP. But for now, market is still ignoring it and trying to show the minor upward continuation. Well, it doesn't mean that reaction will not come, but it seems that for now, we do not have any signs of that. So if you take a look at lower time frames, for example, on the hourly chart, here we do not see anything special. So every market mostly stands the same, two-step forward, sideways retracement once again, two-step forward. Currently, no signs of the possible pullback. From that standpoint, those of you who have intended to take the short position probably have to sit on the hands and see what will happen. In general, taking the position against this kind of action, it's well, might be really costly. So that's the reason actually why in the weekend we said that currently, although theoretically it is possible on the lower time frame, but we're not considering it just because it stands not in a row with our major context and we do not want to take positions against it. So since market already is moving above the OP, we have to consider some other targets that exist here. First of all, since we have some kind of the gut stupid to sell, if market showing no reaction on its target and doesn't show any response, it's logical to suggest that it might be some shifting of the triple two into butterfly. And from that standpoint, you could see that 2190 is 1.7 extension of this downside swing. So theoretical market could form this type of action. I'm not sure that definitely will be reached this week. I would probably even say that hardly it will be on this week, but still this is next destination point on a daily chart. Why I'm not sure is just because if you recall what we talked about the weekly chart, so take a look that here on the weekly chart, market stands at the overbought right around the previous top, which is approximately 2156. This is the overbought level for the current week, while the target stands on the daily 2191, so it's $40 above it. Well, of course, if some really strong event will come, it is possible to reach, but for example, it's non-farm payrolls. But until this moment, it's better to treat this level as not important for the current week. It probably will be on the next week. Another target that we have that we also could consider is XOP that's inner to the butterfly. It stands slightly closer, and this target might be reached. So take a look, it stands $20 lower, 2170. Actually, the same ABCD pattern that we were considering last week with the OP in this level. Now, since the market is moving higher, we're considering the XOP. Why this level is possible? First of all, because it actually stands closer to the overbought on the weekly chart. And second, it's slightly above the previous top. So if we suggest existence of some stop orders, probably exist here, when the market will trigger it, it just showing some technical upside spike just because of triggering of the buying orders, closing the short positions. And the slippage could let market just to briefly complete the XOP and then return it back down, for example. So that's why this target seems more reasonable for the current week and probably we could consider it. Speaking about other stuff, currently, guys, if you haven't taken the long position, it is psychologically difficult to take the position here. From the technical point of view, it's also not very comfortable just because market at overbought and you do not want to take too much risk, suggesting that it might be downside drop against you. This will be not very pleasant and might be really expensive because you do not know where it could stop, and you just could hope that the overall momentum will be strong enough to not show really deep retracement. That is not our option. We do not like this, and that's why right in these points we also do not consider taking the new long position. So we suggest that it would be better to wait and see what will pullback will happen, and then make an attempt to take the long position on some pullback. Particularly speaking, on the 4 time frame chart, we could get really pretty looking kind of the bread and butter, for example, or something of this kind with this downside retracement. That will be much safer, and we will have the clear pattern on our back that led us to place reasonable stops, and it will be a proper way to take the position when you're buying in the dip. So that and towards what we have on the gold. But in general, gold performance look really great, and I'm really glad that this overall long-term tendency that we're suggesting is going underway. But all these nuances of this situation on the gold we have discussed in the report in the weekend, where we have considered fundamental background, and we explained why it might be not as clouseless as it looks like right now. So this is great, but that might be short term, and more fundamental pressure still could appear in the nearest few months. So that's our view on the gold market. Let's keep watching. As a bottom line, we're not considering taking shorts. We're watching for a pullback to consider taking the long position currently.